You're listening to the greatest multifamily investment advice show. My name is Adam Ras, and now I'm talking everything multifamily for an in-depth conversation, and I will be diving deep into raising capital, deals, and underwriting process. Welcome back to the greatest multifamily advice show. We have Darcy Marler, an exceptional guest and real estate entrepreneur out of Calgary, region of Alberta, successful author of more than 4 books, business focus on land development and all sorts of fun. And thanks again for joining us for the second time to talk more about land development and all of the construction aspects of the land development. How are you, Darcy?
Good. Glad to be back. How are you doing?
Thank you, Darcy. Thank you again for being with us today, and I appreciate you taking the time. I would like to start with a new subject today, which is being to focus on the land development versus the flips, and also return of time and the risk of land development.
Sure. Oh, that's great. Yeah. So we talked last time about kind of these micro strategies. So in land development, so just changing zoning or density, or land assembly where you put 2 or 3 lots together and get those ready for a builder, or tear down a 1930s house and build a duplex. So those kind of micro strategies.
Yeah.
Those are all really good alternatives to kind of the short term, the traditional things that we look at, like flips or condo conversions, stuff like that. So these can really fit in nicely there. And what I like more about these, the land development side, is return on time. So typically you've got a really good chance of making more money on one MicroStrategy land development deal than you could on a flip. But you're spending considerably less time on it, because your teams, once you found the project and put the deal together, you're a civil engineer or planner is doing most of the work. So in terms of time spent by you in relation to the amount you make, it's can be significantly good return on time. And I know a lot of flippers, I was one of them, that it's hard to do flips, right? It takes a lot of time. You're at the site every day, and you know, my drywaller didn't show up today. What am I going to do? And then you spend most of your time in your car driving around, getting materials and stuff. So it can be really time consuming, where this, we kind of hand off to the civil engineers and the planners, and we let them do most of the work, the back and forth with the city, and then all of that. And then if you are going to do one of the strategies where you're working on site, again, you're going to let the professionals do that too. So I really would suggest, if you're flipping and having a lot of problem, you're not having fun, or it's just taking too much time, that you might want to check out these other micro strategies in land development, because they can.
I think this is one of the things I even it's in your book, that on land development there's a pros, but the cons on always is the actual time frame, that you have to be quick to finish your project, and this is an actual risk, especially on recessions and inflation. So what is your risk mitigation plan, especially right now, where everyone is talking about we're inside the recession already? We don't know what's going to be the interest rate going up, the cap rate is already compressing, and like, what is the actual risk management for your deals when you're dealing with this kind of unknowns? One of them is the time.
Right. So investing in Alberta over the last 20 years, I'm well aware of the ups and downs and ups and downs and ups and downs of the market, right? So one of the things I've learned is get in and out quick. And that's what makes these micro strategies so great too, right? Because you can just, what I call, move the needle. So, you know, with a flip or with a condo conversion, you have to finish the project for it to be worth anything, right? You can't sell a half finished flip and expect to get any money for it, right? But with these micro strategies, you can just move the needle, right? So let's say you just buy some land, change the zoning and density, and then sell that. Or the next step, you do that, and maybe you tear down the house, you can sell that. Like because the value is in the land, not the building, you can just upgrade the land in little tiny bits and sell off. So then if you actually want to do the construction, if you're comfortable with that, perfect. If you're not, you know, you can get out at various stages before and sell it to a builder or sell it to another developer just by improving the property. So that's a great way to mitigate the risk by doing that. So, and then the other thing you can do is again, picking your strategy based on what you like and what makes you comfortable. let's say you want to build. I wouldn't suggest you doing all the zoning and developing and applying for permits and doing all that stuff. I would try to look for land that's already zoned the way you want it, and then get right to the building. You'll save yourself a bunch of time. If you don't want to build, then look for land where you can get an uplift by changing zoning or density. So you tailor your searches for what kind of land you're finding based on what you want to do. And that way you can save a lot of time and get in and out quick, as I say. So you're not. But just another comment real quick. I'm 55. I bought my first house when I was 20 in 1987, and I paid 12.5% interest. So
you're coming from this.
Yeah, so a little perspective here. So anyway, and I thought I was lucky because in the earlier 80s, interest rates were like 16%, 18%. So I thought I got a deal at 12.5. So that's traditionally, though, the 1970s, the 90s, the 2000s, interest rates are always kind of between 5 and 8%. So we're actually kind of getting back to normal if you look at it that way, because kind of that 1%, 1.5%, 2%, that wasn't really sustainable. At certain times, it happened a bit here, but in Germany, for example, a couple of years ago, they had negative interest. I don't know how is that sustainable, right? So you kind of get so low that it can't sustain itself. So we're kind of just getting back to normal. So people do make money at 5% or 8%. Like it's been done. So
I think my next question would be during this strategies, especially on uncertain markets right now, you don't know what's gonna be the market after 6 months or 1 year. What is your approach when you're dealing with, especially with your students, with the different strategy? Because you have raw land, you have land assembly, you have upzoning, maybe paperwork only. What do you recommend your students when they're approaching the market right now?
Right. So I'd still get back to the basics. It always goes back to jobs, right? It always goes back to the demographics of an area. Are people moving into an area or moving out? Are companies moving in or moving out? What's the general economy doing, right? So it always comes back to that. So you want to invest in areas where the long-term outlook is positive, right? You don't want to get into a place. That's one of the problems in the past with Alberta, was that we were very heavily dependent on oil and gas. Back in the 80s, we were about 35% of our economy was on oil and gas. Now we're down to about 17 or 18%. We've cut that in half. So that's something that maybe the media doesn't give us enough credit for either. We've actually done a good deal of work to separate ourselves from oil and gas. And now that we're heading out of this recession, because we've been in a recession for 7 years here in Alberta, maybe not officially or technically, but boots on the ground, trust me, we're in a recession. And we're coming out of that. So we're looking at 3 or 4 good years here where, Calgary was just named the third most livable city in the world by the Guardian. It's a really, so very high quality of life. We're getting a lot of not only investment money from Vancouver and Ontario, but we're actually getting people moving here. Like I was in Ontario, I was in Toronto last month, and on the flight back, the person I was sitting beside was a lady in her 30s that she was coming out to check out Calgary as a place to live, right? So again, kind of pick your spots. Look for places, again, that the job.
The market fundamentals, where is an actual net immigration opportunities and new projects, as you mentioned.
Right. So it's immigration. There's 2 parts of immigration. One is international immigration, people coming to Canada from outside. Traditionally, they go to Vancouver, Toronto, and Montreal. They come to Alberta if the economy is booming. They didn't the last 7 years. We had net out migration for most of the last 7 years. Yeah. But there's also intermigration within Canada too, right? Yes. So, there's been an uptick of immigration, and they expect that to continue over the next 2 or 3 years in Alberta. But you're still, like, I think everybody's kind of worried about Ontario, for example. We had like 25% increases year after year for like 5 years. It was crazy. But I think immigration is going to soften the blow there too, right? Because you've got whatever 420,000 immigrants that Trudeau's kind of approved. Well, they got to go somewhere, right? There's still most of them are probably still going to end up in Ontario, right? So
Toronto.
yeah, so
Yeah.
that's gonna help ease the landing a bit. And what we saw was another thing here, and we'll get off topic into rentals a bit, but one of the weird things about the last 7 years with rentals in Alberta was you saw, with interest rates being so low, you still saw all this stuff being built. So you still saw these big towers going up in Calgary and whatever. You're sitting there saying, well, we've got net more people moving out than moving in. So who's buying these places, right? Or who's renting these places? And what you saw was kind of a cannibalization of the older products. So like a 1960s apartment or 1980s apartment, you saw people moving from those into someplace nice and new. So the rents of the older stuff just got kicked, right? So and we saw some of that in Ontario to a lesser extent too. But now immigrants coming in, the ones that have money or the people moving around Canada that have money are going to go to the new stuff. And the immigrants that maybe have less money, they're going to now fill those older apartments and stuff too. I think that's going to increase the rents and lower vacancies in that older inventory, that older product. So
I think that I heard last week they're trying to limit the rent increase.
Yeah,
which is going to be have a huge impact also on the market. But far from this, my next question will be: what was the upside to have be a builder versus hire builder as a developer, especially on a smaller land development assignments or strategies? So what was the upside for you to be a builder versus hire a builder?
Well, I mean, specifically in Ontario, it's almost impossible for a small guy to get the Terrian approval. That you have to actually, it's a lot of hoops to actually become an official builder. So it's kind of almost impossible to do. So you really have no choice but to do it. But really, as an investor, like for example, I've called myself a full-time real estate investor for the past 20 years. And really, because I was on-site supervisor guy, really, I was just buying myself a job, right? I wasn't really an investor. So I'd do a flip and it would take me 4 months, or I'd do a condo conversion, it would take me 8. But basically, I'm just buying myself a job. No different than if you buy a Dairy Queen franchise and you're physically there all day, making blizzards. That's a job. It's not an investment, right? So my suggestion is lift yourself up a couple of levels, become a true investor. You're going to make most of your money finding stuff and funding it and putting the deal together and figuring out how that works. And then let the professionals, your civil engineer, your planner, do all the stuff through, the application process back and forth with the city. When it comes time to physically put pipe in the ground for development or to build that duplex, let the professionals do it. And you can lower the costs sometimes by, doing deals with them, or a lot of builders now will partner with you. Not all of them, but some of them will look to partner. Sometimes you can get maybe they won't partner, but for a little extra bonus, they'll pay for some of the materials, or they'll do maybe instead of a 30 or a 45 day collection period, maybe they'll extend it to 120 in return for a bit of the profit on the back end. So you can kind of work some of these deals by having builders kind of work with you and partner with the builders. So that's one of the ways to kind of get around that. But I would always, like, if you have no construction experience, then don't even think about doing it. If you do have some, I'm still thinking you'll probably make more money by thinking as an investor and just farming that out. That's just been my experience.
I think one of the things is important both in land development, construction, or multifamily is find the right partner with the same goals. So how has an impact in your real estate career? Because we mentioned last time you started with multifamily, but then during the different downturns, you realize this is not the perfect strategy. It's going up and down. You lost a lot of money before. You mentioned this in 2014. So looking for the right partner, what was this mean for you? Like, did you had an actual successful partnership especially on the land development, help you to scale your projects?
Not originally. Like I was a lone wolf guy for years. Like that was one of my, looking back, that's one of the things I wish I could change. Yeah, I've definitely discovered the benefit of having operational partners. We tend to think, and most of the training and teaching in real estate is about how to get a joint venture money partner. We're always thinking about the money partner, right? And I don't think we give enough thought to finding someone who can help you, because we all have strengths and weaknesses. I was always good at the finding and the funding part. I didn't like the on-site stuff, right? So I should have had a partner deal with that, or else delegate it to another one. I've recently found a partner who's really good at finding money. Like they used to work for an exempt market dealer, right? So that's their strength. So perfect. I'm really good at finding the opportunities. Now I'm working with this guy to find the money. Once you put the deal together, okay, now let the planners and the actual builders physically do this stuff, right? So by not being lone wolf guy, you can. So most of what I'm telling you here is kind of don't do what I do for 20 years.
But recently you started to change this strategy, as I mentioned.
Yeah. So I went through kind of a change, a real depression in 2018. And since then I was all over the place, mostly because I wasn't happy. I was looking for another strategy. So I was always, instead of focusing on a specific strategy, I just look for the next opportunity that seemed like it would make money. So, that gave me experience in all the strategies and gave me the knowledge, very, very wide knowledge to write books and do courses and stuff. But it didn't necessarily, if I'd have focused on one thing and just really became good at that, I'd probably be richer. Not that I'm missing meals now, but I mean, if you focus, I've really learned over the years that success and scaling is focus, perseverance, and funding, right? So, and what are you going to focus on? You've got to figure out your why and what you want to do and what you're good at, your strategy to figure out what you're going to focus on. But if you can build a really strong team, have an operational partner, and focus on one thing, you'll do much better in the long run.
My next question will be about the actual market right now. How you see the market on the last 4 months, and what is your expectation about the market, especially on the land side, and looking for opportunities from the seller perspective? Do you see that there is an actual slowdown on selling lands, or what is the actual current updates on, especially that I think you're focused more on Alberta?
No, I'm kind of all over. Like with this course, I'm talking to people over. Like I just saw this thing from one of the students who's a realtor who said kind of the down dip in Toronto itself has kind of leveled off. So that looks kind of good. I still go back. I always say that with immigration, with the housing crisis, I really do think that land development and new construction is going to be the next big thing in real estate, education, and actually investing over the next 5-6 years. And I think that holds true. So in the short term, you'll get your ups and downs, but there's just such a demand for lots, building lots, and actual places for people to live. We've got, there's a term that they use now that's kind of new. It's called the missing middle. And so that means there's lots of houses for millionaires or over $1 million. And contrary to kind of what you hear, there's still lots of money going to the lower income, the lower rental crowd. So it's that, depending on where you are in the country, but let's say that $300,000 to $600,000 house or condo that kind of normal everyday people can kind of afford. So that's kind of an actual term now, the missing middle. So if you can supply, like any business, if you've got demand and you can supply, there should be profit there, right? So I still think long term, or even in the relatively short term, there's still lots of opportunities to supply that demand and make a profit.
I think the next time we're gonna need to underwrite one of your deals, especially on land development, break it down, show it to the audiences. It's gonna be really helpful to the listener to understand the risk item, how you analyze the risk mitigation part, and more about the lending side about it. But again, thank you again for being our guest today. Focus on a really important subject, basically, especially as you mentioned, there's a gap on the market and it's going to be really a big hat on the next 5 years to cover and help the actual need on the market, especially with the new immigration coming internationally or internally.
What you're finding, just one more thing, that you're finding in a lot of the smaller towns or even good-sized cities, because we focused on condos instead of rental, and because we focused on the higher end houses, a lot of the inventory is old, right? And so now just normal, it's time to be replaced. So you're going to see a lot of that older stuff knocked down and replaced with newer
especially
stuff.
in old towns. The product is really old, versus in Toronto you still find apartment like product 60s and 70s, but in old towns all of the actual single family homes is 40s and 30s. So this is going to be
even that 1970s, there's a lot of stuff from the 50s and 60s. And so even that's 70 years old now, right? So I mean, it's getting up there too, right? So
I was like checking Godfather. It's been 50 years on Godfather. 1972. So
so it's and it's getting hard to insure that old stuff. It's getting hard to. I was just talking to a student today who's also a housing inspector, and he says he goes into houses all the time, and why are you flipping this? Why are you burying this? Like, it just tear it down, right? Like, it's there's no insulation. If it hasn't been changed yet, it's single pane glass, it's old aluminum wiring and old pipe, and like they're tiny rooms. Like, so I think a lot of the times we flip and burr these because there's so much competition, we can't find anything else. But really, part of my mission is to get people to think different, maybe flick a switch in their head that says, let's tear down, because it's really inefficient too to have like a 800 square foot house on a 50-foot lot. That's just a really inefficient use of land, right? And with the housing crisis, we need to be better there.
I think the better strategy is going to be a hard strategy with the new interest rate. I think the better strategy was not that's famous on the 90s and 80s. No, because of the interest rate. Doesn't make sense.
Well, the other thing too is we did it. We just didn't call it BRRRR. BRRRR is a new thing. Before it was just, instead of fix and flip, it was fix and hold, right? Like, so we just call it different. But you still end up with one family living on that lot, which is very inefficient. So let's get 4 or 5 families living on that same land, and then now we can get the younger people a place to rent or place to buy and take care of that missing middle that I was talking about. So I think it's all kind of coming together, and lots of opportunities for investors to because there's no end of older stuff. So once you kind of tweak your brain to think differently, it's
100%. Thanks again for being with us today. And as you promised us, we're gonna underwrite a deal next time. We're gonna share it, and we're gonna go from there.
Okay, sounds good.
Thanks a lot.